Is there a great stock rotation? That's what we're going to dig into. My name is Brian Cannon, and welcome to Markets in 5. So when we look at the rotation of stocks, a lot of times the 10-year Treasury yield has a lot to play into it. So we've had a long period of the 10-year Treasury dropping. So when the Treasury yield drops, bond prices rise. So they're inversely related. So as you can see here in the chart, in the green line here is the Treasury yield. And in the red here is the 10-year Treasury bond. So, the 10-year Treasury bond has been on a nice direct trend upwards. And so it's starting to roll over here a little bit. And conversely, the 10-year Treasury yield seems to have found a bottom, and it's heading up. So if you look here at these blue arrows, there was a kind of a support found. It bounced off support. It came up. It bounced off support again, and then it broke it. So Treasury yields basically just the bottom fell out. And so here we are in 2021, and they've come all the way back up to this resistance zone. And so it appears they've kind of broken through it and pulled back down a little bit. So it's going to be very important for us to watch this line of resistance. Is it going to hold and it's going to stay below that level? Then you can anticipate Treasury bonds continuing to rise. If it indeed breaks through that level of resistance and breaks through it, then you would anticipate that the Treasury bonds would indeed drop. So I would anticipate they would come down somewhere back to this mean reversion, this blue line here. But in the meantime, this is what we're watching, because if that level is breached to the upside with the Treasury yield, bonds are just not where you need to be. So in this next chart, when we talk about the rotation of stocks, you can see basically going back all the way to the early 2000s, there was a long period of time that value actually outperformed growth. Now, it's been so long ago that rotation occurred. In 2007, 2008, in that major pull down, when it bottomed and started to take back off, you saw growth just trounce, just completely way outperformed value. And it's been so long that it's hard to believe that even a value stock could outperform a growth stock. But I do, and I do subscribe to mean reversion. So when you look at the relationship of growth to value, you're starting to see a breakdown. So it took out that support level, and it's heading down. Now, is it going to be a kind of a bull pennant or flag that basically ends in a further upward trajectory here in the green arrow? Or is it kind of, break down, continue to break down, and you're going to see value stocks outperform growth stocks? So we're not sure yet. We're keeping our eye on this, but certainly if value does really start to outperform growth significantly, then obviously we need to shift focus away from the internet type stocks and go into more of the value related type stocks. And that's something that we're watching. We've started to make a few moves. But it will be significant as far as where the market goes. Now, in this next chart, we talked about this in the last Markets in 5, but essentially just wanted to come back to it from the standpoint of negative divergence. So again, when you've got a rising stock price and then you've got all the other indicators basically telling you that the coast is not clear. Ultimately, it did resolve itself to the downside. So again, we do look at these signals to kind of help us determine should we be in a certain area or should we not? And we're starting to see several negative divergences out there across the a lot of different metrics that we measure. However, I do believe that the stock market is going to continue to head up. I do think we're going to have a lot of volatility this year in the short and mid range, but I do believe long term, the market's going to resolve itself to the upside. But we just need to keep our eye on these types of things when we're making those stock picking selections. So that's about all I've got for this Markets in 5. But if you have any questions or if you'd like to do a deeper dive on any of this, by all means, give us a call and let's talk. But we'll see you in 2 weeks on the next Markets in 5.